Hello traders. Welcome to KP Technical.
6. Bearish Candlestick Patterns. Bearish candlestick patterns usually form after an uptrend and signal a point of resistance. Heavy pessimism about the market price often causes traders to close their long positions and open a short position to take advantage of the falling price. Hanging Man. The hanging man is the bearish equivalent of a hammer. It has the same shape but forms at the end of an uptrend. It indicates that there was a significant sell-off during the day, but that buyers were able to push the price up again. The large sell-off is often seen as an indication that the bulls are losing control of the market. Shooting star. The shooting star is the same shape as the inverted hammer but is formed in an uptrend. It has a small lower body and a long upper wick. Usually, the market will gap slightly higher on opening and rally to an intraday high before closing at a price just above the open, like a star falling to the ground. Bearish engulfing. A bearish engulfing pattern occurs at the end of an uptrend. The first candle has a small green body that is engulfed by a subsequent long red candle. It signifies a peak or slowdown of price movement and is a sign of an impending market downturn. The lower the second candle goes, the more significant the trend is likely to be. Evening star. The evening star is a three-candlestick pattern that is the equivalent of the bullish morning star. It is formed of a short candle sandwiched between a long green candle and a large red candlestick. It indicates the reversal of an uptrend and is particularly strong when the third candlestick erases the gains of the first candle. Three black crows. The three black crows candlestick pattern comprises of three consecutive long red candles with short or non-existent wicks. Each session opens at a similar price to the previous day, but selling pressures push the price lower and lower with each close. Traders interpret this pattern as the start of a bearish downtrend, as the sellers have overtaken the buyers during 3 successive trading days. Dark cloud cover. The dark cloud cover candlestick pattern indicates a bearish reversal, a black cloud over the previous day's optimism. It comprises two candlesticks, a red candlestick which opens above the previous green body and closes below its midpoint. It signals that the bears have taken over the session, pushing the price sharply lower. If the wicks of the candles are short, it suggests that the downtrend was extremely decisive.
For more stock market updates, subscribe KP Technical.